At this point, I think we've all heard about what's going on with the GameStop stock. The Reddit community Wall Street Bets teamed up to create a short squeeze, which has sent the stock soaring. Over the past few trading days, this effort has really blown up with billionaires like Elon Musk, Chamath Palihapitiya, and Mark Cuban started raising awareness and even entering the game themselves. But why are these guys helping Wall Street Bets and indirectly promoting something that is arguably just gambling? Before we get started here, we wanted to say congratulations to all you crazy guys who bought in and made life-changing amounts of money on this. Be sure to save and invest it wisely so that it lasts a long time to come. Before we begin any further, please make sure to subscribe to Glory Investing Show and hit the bell icon for the future video updates. I think you guys have all heard dozens of explanations as to how a short squeeze works, so I'll keep it brief and use a super simple example I saw on Reddit. Let's say bananas cost $10 a piece on the market. One ape on the market has 5 bananas. Meanwhile, some snakes come along and ask the ape if they can borrow the bananas for a week. The ape agrees and gives his 5 bananas to the snakes. Instead of safely storing the bananas though, the snakes think they can make some quick money by selling the bananas on the market for $10 a piece. You see, the snakes heard some rumors that the price of bananas is about to go down to just $5 a piece. So they figured they can buy the bananas back for just $5 a piece and give it back to the ape later on. This way, the snakes can profit a solid $25. But unfortunately for the snakes, a group of apes noticed what the snakes were trying to do, and they decided to get back at them. The apes would go out and buy all the bananas on the market. Now, they can demand the snakes to pay whatever price they want. Ideally, the apes are looking to charge such a high price that the snakes go bankrupt trying to buy back the 5 bananas they sold. This way, the snakes won't be able to pull a quick one on any other apes anytime soon. But see, this entire plan only works until the apes don't backstab one another. If one of the apes sells their bananas to the snakes for $10, the entire effort is wasted. However, if they stay strong together, they can make the snakes regret trying to make some quick money. In reality, the snakes are of course big banks, and the apes are of course the crazy guys at Wall Street Bets. What's interesting though is that some Papa apes also decided to support the effort, but why? Well, you see, the Papa apes have had their own beef with the snakes for years, and for other reasons, starting with market manipulation. Market manipulation is of course unethical and very illegal, but snakes have found several ways to get around this anyways. First of all, snakes often like to pump out fake news. This isn't to say that the news itself is fake, but they paint it in a misleading way. For example, take Tesla's recent run-up before the S&P 500 inclusion. During the run-up, the street posted an article titled, "Tesla, trading at $650, gets $90 price target from JP Morgan." Now, they could have titled the article, "Tesla gets a price upgrade from JP Morgan as their previous price target was only $80. But they didn't do that, and that's not just to get clicks on their page. Rather, the market makers, or the snakes, want people holding Tesla stock to sell so that they themselves can buy the stock for cheaper. Investors who have been in the game for a while are easily able to see past this manipulation and won't sell their stock no matter what. However, as Tesla was getting added to the S&P 500, many brand new investors were getting into the stock, and they weren't so aware of these games that the market makers play. They also weren't aware that JP Morgan's previous price target was only $80. As a result, many of them sold when they heard that the biggest bank in the world thought Tesla was worth $90 a share. Consequently, Tesla stock tumbled from $660 to $570 in a matter of hours. But the next day, Tesla didn't continue to go down towards $90 a share like JP Morgan predicted. Instead, it quickly bounced back into the 600s. I'm sure that seasoned investors buying the dip accelerated this rebound. But I have a feeling JP Morgan was buying the dip. After all, they just happen to own $4.7 billion worth of a stock they think is about to crash 85%. As you can see, drumming up fear to buy for a cheaper price is extremely common amongst big banks and hedge funds. This same principle works the other way too. Whenever a big money player wants to exit a position for whatever reason, they'll drum up excitement in the market. Take Apple's recent quarterly earnings report, for instance. Apple had a blowout quarter, destroying expectations with a monster $100 billion quarter. The media has likewise been hyping this earnings up for weeks, and all the articles that came out afterwards were also very positive. But for some random reason throughout the actual day of earnings, Apple stock would dump from $145 to $137. Now that might not sound like a lot, but for a company as large as Apple, that's a massive move. That drop is equivalent to Apple's market cap dropping $130 billion. As you can see, creating artificial excitement and fear through the media is one of the primary ways big money manipulates the market. Another popular manipulation method that hedge funds often turn to is bear or bull rating. Hedge funds and big banks have a lot of money, and with that comes a lot of influence. As a result, whenever they're looking to add on to or take away from a position, they bull or bear raid the market. A bear raid is when someone dumps their shares onto the market in order to create short-term fear. Banks usually utilize this method when they want to add on to their position. For instance, let's say a hedge fund has $10 billion worth of Amazon stock. They want to add another $10 billion onto their portfolio, but they don't want to pay market price for the shares. What they might do is sell $1 billion worth of Amazon stock in one go. This will of course cause the stock price to trend downwards. Stock traders will often pick up on this and will exit their position while they still have profits on the table, which will add to the sell-off. As this downward movement starts to gain traction, we'll see people's stop losses getting triggered, adding on even more selling pressure. Before you know it, the stock will be down 2 or 3%, which is again large numbers for a company as large as Amazon. And this is when the hedge fund will go ahead and add the $10 billion stake onto their position. Conversely, if they're looking to get out of Amazon, they'll do the exact opposite. They would go ahead and buy $1 billion worth of Amazon stock, which will create momentum upwards, at which point they'll scale out of their position. If they don't want to actually invest money into the stock or liquidate their current position, they might use yet another strategy, which is spoofing the tape. The stock market is quite tricky to understand, especially for beginners, so what many beginners do is copy what big hedge funds do. Hedge funds are well aware of this and use spoofing to take advantage of these beginners. If hedge funds don't want a specific stock to fall below a certain level, what they'll do is place a fake market order for millions of dollars at the desired price. For instance, if Microsoft stock is $220 and a hedge fund is interested in keeping the stock above $200, they might place a $10 million buy order at $200. Abnormal buy and sell order tracking software will quickly pick up on this massive order and tell retail investors that some whale is trying to buy Microsoft if it drops to $200. Considering that many beginner investors mindlessly follow such orders, many of them will end up also putting in buy orders for $200. However, once the stock reaches around $201, the hedge fund will cancel their order for $200, and the retail investors will end up being the ones buying in at $200 and padding the fall for the hedge fund. Anyways, hedge funds, market makers, and big banks have dozens of similar strategies that they employ on a daily basis to move the markets in their favor. As a result, beginner retail investors end up losing billions upon billions of dollars collectively every single year, which the snakes pocket as easy profit. Considering that Tesla is one of the most manipulated stocks on the market, Elon Musk has obviously not been a very big fan of these snakes for quite some time. So when GameStop started to run up, causing the shorts to lose billions of dollars, he was quick to raise awareness using his Twitter account, tweeting GameStop and linking the Wall Street Bets community on Reddit. What made this action even more appealing for him was that many of the shorts that were losing money on GameStop were the same people who were previously shorting Tesla, like Melvin Capital and Citron. In 2018, Tesla was the most shorted stock in the world, and as Tesla was struggling to ramp up Model 3 production, these shorts were continuously running bad articles about Tesla, suggesting that Tesla was going to zero. Evidently, Elon Musk didn't hesitate when he had the opportunity to get back at these shorts big time. Meanwhile, Chamath Palihapitiya has been watching certain retail investors getting crushed by big banks for decades. Thus, he too took this opportunity to hurt the shorters. On the morning of January 26th, he would throw a little over $100,000 at GameStop call options. He would receive a lot of criticism for encouraging teen gamblers and essentially running a pump-and-dump scheme. But really, at the end of the day, neither of these are the goals of any of these billionaires. I'm sure all of them are truly happy to see the little guys winning. Unlike the media, but their primary goal is much bigger than just making you guys money. Their main goal is to put some of the businesses that have been screwing over retail investors for years out of business. And when everything is said and done, this may very well be what transpires. What do you guys think about this mission? Comment that down below. Also, drop a like if you guys enjoy seeing big money finally getting a bit of karma.